Today is Thursday, the 5th of May, Wednesday actually, but the S&P 500 came right up to that 5-day moving average in the prior important level of resistance turned support, and we saw it back away from there. So we've got to be really cautious here, I think. We're seeing so many big stocks, big leading stocks lose a lot of money for a lot of people. I mean, who buys this garbage? And truly, it's garbage because all it does is go straight down. You might have an opinion about Coinbase as far as the company goes, but when these stocks come public and they say we're worth 250 and then people buy 400, buy it at 400, it continues lower, you shouldn't be surprised when you're losing money. Don't buy this crap that's just so well marketed by Wall Street. Pay attention to what the price says, not the marketing machine. S&P 500, though, is still healthy on a daily time frame. It's the intermediate term time frame where this concern comes from. So unless we can get back above and hold above today's high tomorrow, then we have to maintain a defensive posture. Otherwise, I still think it's possible we could break lower and come down to that volume-weighted average price, at least near about the 408 level. The Nasdaq is clearly the laggard here, stuck below this prior band of support up in here, and obviously below the declining 5-day moving average and weaker than the S&P 500 because we've seen this prior support level. We couldn't even get up to it. We couldn't get up to the 5-day moving average. We're seeing a lot of selling in these tech stocks. And, you know, the tech stocks have led the market higher for a long time. Once they start to get weak, you've got to pay attention because it has implications for the rest of the market that might not be obvious yet, but perhaps will be coming. Realistically, the Russell 2000 has just been, doing nothing for the last 4 months. And we're back to the midpoint of that range, stuck right at the 20 and the 50-day moving average, just above the year-to-date VWAP. It kind of remains a waste of time, basically. Semiconductors got a little bit of a bounce in here today, and they are still, of course, below the declining 50-day moving average. And again, that's the first time that the 50-day moving average has been declining since way back in May of 2020. So, in a year, basically. You've got to pay attention to that when that happens. We want to look at this market, again, on the intermediate term time frame, clearly guilty till proven innocent. It deserved a little bit of a bounce after a decline like this. You got to think, like, who are the dummies who short down here? It doesn't make any sense. So if you're looking for a short, we wait for this pattern of short term. We saw a higher high and a higher low, but below declining 5-day moving average. It's not easy. It's not meant to be easy. We have multiple time frames to deal with. That's why I always deal with one time frame as the primary time frame that I trade on, which is the intermediate term swing trade timing. The rest of it is good information, but it's not going to help us to look at a weekly chart and say, hey, well, we're still in a great bull market, I'm just going to hold on. That's not what Alpha Trends is about. Biotech's got smashed here today. These guys are just pathetic that they cannot rally and hold on to a gain. This declining 50-day moving average has told us don't trust this rally. What I was hoping for, as I mentioned, was maybe some stabilization in there, and then this 50-day moving average starts to flatten out. We can move this forward one day. We're going to be getting rid of this data, but again, maybe in a week and a half, once we're down in this area and getting rid of this data, the 50-day moving average can flatten out. But right now, we're again testing, we're about to test that 200-day moving average. It's held 3 times so far. If it holds again the 4th time, it most likely will because of the magnitude of the decline to get there. I would expect maybe it comes down slightly through, then we get a lower high, and then maybe even further downside. It's just, you can't trust it with a declining 50-day moving average. And that goes for every single stock out there. I talk about this all the time, and people are still stuck on yesterday's stories like Zoom meetings. It's a piece of garbage right now. It has been garbage since this earnings report over here. That's just a fact. It's not an opinion. If it offends anyone, look at this. It is breaking down hard. So is Peloton. These stories are just not good to own. They're simply stories. You might look at it and say, well, it's on the volume-weighted average price from the IPO. Great. But that doesn't make it a buy. Look at this. People can't wait to get out of this thing. They're selling it all at once. That is not, that's smart money getting out. Maybe they're getting a little bit emotional right now, but financials, another new all-time closing high. Stick with stuff that's going up. It just seems so damn obvious, like the energy names. We've been talking about this since last Friday and even before there, that this was going to be the group to keep an eye on. Here they are up at great $1.72 gain. What's that? 3% here today.